Hi, good morning. Happy Monday. Memorial Day weekend coming up, obviously. And one thing that's interesting this morning is the dollar. We're just seeing that finally come off a little bit. And if you look at this chart, what you'll see is just right here, this is the long-term dollar versus oil, which has been very important for me over the years in terms of deciding whether or not I'm bullish, bearish on oil. You can see at times it's been extremely closely correlated. You can see some disconnect, a little bit hard to see nowadays, but basically back here, Trump being elected, there was some breakdown. And generally speaking here, you could be very bullish on oil because you can see the dollar weakening a lot post-COVID, oil coming up a lot, being dragged up by the dollar. And then you can see this absolutely, essentially unprecedented breakdown that we've got here between oil going higher and the dollar going stronger. The dollar on this chart is inverted, in case you're completely confused. So essentially oil's gone higher, dollar's gone higher. And what you can just see here is a bit of a correction. This should take a little bit of heat off oil prices in emerging markets. Just jumping over to the note that I put out yesterday, if I can work out what's going on here. Hang on, I've got to share a different screen. Let's just go to a different screen and look at yesterday's note quickly. The main things that we're talking about for this week are retail earnings. There's a lot of significant earnings reports coming up. You can see here Best Buy, Dick's, Macy's, you know, the list goes on. So I think the theme of the week is going to be concerns about the US consumer. And presumably after the Target and Walmart results had a negative effect on markets, there's plenty of potential this week for concerns to rise about, you know, the driver of the US economy, which is essentially consumption, and the extent to which the consumer is getting hurt by high gasoline prices. We also highlight that there's a couple of big potential airdrop stocks that are going to report. Notably, you've got Zoom here and Chewy, you know, some other ones. And the one we focused on yesterday was actually Nvidia, which, you know, is a huge story in terms of its market cap. Here are the top 25 stocks in the market, Apple, Microsoft, and so on. And you can see in here that Nvidia, which has fallen like a stone, quite frankly, it's down by half since in the last 6 months, since November. Nvidia is still, you know, a $400+ billion market cap company with one of the highest PE multiples in this top 25. Here you have Tesla, here you have Amazon. They both look very overvalued. Nvidia is right up there. And then the other guys, Visa and MasterCard and Eli Lilly, who are, I don't approve of Eli Lilly because of their diabetes, but their insulin pricing methodologies are just outrageous in my opinion. But anyway, that's neither here nor there. Anyway, look how low Exxon is, look how low Chevron is. And then you have down here, interestingly, Meta Platforms, which looks just outrageously cheap. I mean, I know young people aren't using Facebook, but that does seem very low. And then the guys that actually have lower multiples would be JP Morgan, Bank of America. Then it's interesting that Pfizer is so poorly viewed by the market in contrast to Eli Lilly. But anyway, the point is that Nvidia is reporting this week, and that'll be a big result for the tech versus oil move. Now, if you look here, there's this interesting chart that I picked up on Twitter, whereby you can see that there's a bit of denial going on here in terms of the forecasts for earnings. One of the bull arguments for the market is that earnings estimates are still high. Probably buybacks also a big driver, but basically on the earnings estimate side, you can see there's a rollover here, which tells you that the forward PE is forward EPS estimates are just too high and are likely to have to start coming down. And that's bad for growth stocks. If you look at this one, Nvidia, and by the way, Tesla's chart is almost identical. The bad news is you can see that it's over, you know, 1.5% of the S&P by market cap, but less than half of that in terms of earnings. Now, of course, the good news is that the earnings are growing and Tesla looks similar. You can see you've just flattened here. And the question is, if that starts to go negative, as you see, for example, with the Amazon chart, this is going to come down a lot and Nvidia is going to get crushed. And the trade for the week, let's see how it works out. Nvidia versus Exxon, very interesting. You can see here that we're now almost identical after a dramatic differential here as recently as June last year. One thing I would say about Nvidia is this CEO that they have, Jensen Huang, is clearly a very impressive person. And what we do is we buy good management. So whilst there's an issue here that's highlighted that actually there's a shortage of chips, and not only that the shortage of chips is preventing the chip making machines from being built. So you can't build the machines to make the chips because there's not enough chips. That's had chronic shortages. We'll see how Nvidia comes out this week and how well retail plays out. That's about it. I'll leave it there just because I've gone on a bit, and I hope you have a great week.